Want to know why the US trade deficit is actually getting bigger? It turns out higher savings can lead to a country's economy becoming worse off and result in high unemployment or higher debt. Stay tuned as we break down what these unexpected consequences mean for the future of US trade. Basically, it is not what it seems like. Usually when we hear savings, we automatically consider it as an excellent thing. But what if I told you that if people suddenly start saving more, the US economy might actually struggle? This happens because if everyone saves more and spends less, businesses make less money. This can lead to businesses cutting back on production, which results in people losing their jobs. So everyone attempts to save more, but a bunch of people end up unemployed, which does not sound great, does it? This in turn can lead to high unemployment and high debts. The government then tries to fix this by borrowing more money, which increases the country's debt. This is related to what is known as the trade deficit. A trade deficit happens when a country imports more than it exports. The US has had a big trade deficit for a while now. Some people think this is bad because it means the US is buying more stuff from other countries than it is selling to them. President Trump and other officials considered this a matter of national security too, and tried to fix it through new trade policy and tariff impositions. However, putting tariffs on imports from countries like China does not always work. It is like trying to fix a leaky pipe with a Band-Aid. The real problem might be that the US is spending more than it is making, which makes the trade deficit grow, no matter how many tariffs you put on. There are different views on how the US-China trade relations have impacted the trade deficit, and whether it is a loss or a gain for the national economy. Some claim that these tariff policies were not the correct approach to fix the real problems. A major problem is not measuring the real benefits of trade. The US benefits from trade and investment flows with China, which support economic growth. One big reason why the US has a trade deficit is that people in the US tend to save less money than people in other countries. The amount of savings versus investment dictates a lot about the trade balance. Also, if the US economy is doing well, people buy more things, including things from other countries, which increases imports and the trade deficit. The exchange rate can also affect the trade deficit. A strong dollar makes imports cheaper and exports more expensive. Another reason why the US has a trade deficit is because the dollar is the world's reserve currency. This means other countries need dollars to do business. This high demand for dollars lets the US borrow money at a lower cost, but it also makes US goods more expensive, which can hurt exports. Some also fear de-dollarization. This means some countries want to use other currencies, but this has not really taken off. The US can also impose sanctions, which means stopping a country from doing business in dollars. This is powerful but may hurt the standing of the dollar itself. Trade agreements, such as the one with South Korea called KORUS, were supposed to help. However, the trade deficit actually doubled since it was instated. This led the Trump administration to change them, but the effect is still debated. Trump's trade policy prioritized renegotiating trade agreements like NAFTA and combating what he saw as unfair trade practices by countries like China. His administration thought that past agreements, as the root cause, have allowed for cheaper foreign imports that damaged American factories and jobs. However, many economists do not believe the said ideas and warn against fighting to win against other countries' trade relations. Instead, they argue that these deficits can be a problem, often caused by foreign governments. Trying to force Americans to save more might not work. If foreigners still want to invest in the US, the trade deficit will stay the same. It might even cause high unemployment or more debt, which is the opposite of what we want. This has led to intense debate on the causes and consequences. If China's external surplus results from policies that stimulate exports and growth amid domestic demand. Also, if the US tries to fix this by blocking imports, the dollar could get stronger, which would make exports even harder to sell. A better approach may include fixing underlying economic imbalances and global considerations. Economists add that we need to focus on giving people skills to compete in a changing world, instead of protecting failing industries. There is also currency manipulation. Some countries keep the currency low to make their exports more competitive. For example, China has been in the past. The US does it a little bit. National security is also a concern. With increased dependence of foreign investment, it can be a threat to the national security. It has been argued that a large portion of the US trade deficit is with manufactured goods. If the US does not enact policies to assist their manufacturing sector, this will continue to be a problem. As you can see, the US trade deficit is a complicated issue with no easy answers. While we have covered a lot in this video, there are still some questions left unanswered. For example, to what extent are global supply chains affecting the trade balance, and what new trade dynamics will emerge as technology continues to evolve? The effects of excess foreign savings on the US economy can be higher unemployment or higher debt. We hope you found this video helpful. If you want to learn more about finance and economics, be sure to like, share, and subscribe to keep watching such amazing videos. Thanks for watching.